Oh man, so unless you've been living under a rock, it's clear that if you're an investor anywhere on the globe, it's been a very, very tough time. In this video, if you're invested in crypto, I'm going to be explaining what I'm preparing for as a potential worst case scenario and what I'm going to do if we head into a prolonged bear market slash global recession. So make sure you watch till the very end. You're going to like some of the insights in this video. Smash up the likes and subscribe. And if you like my perspective, a lot of these pieces of information we were discussing in our course member live streams, ijaz.uk/member to get access to that. Now, what I want to do, we've currently got Bitcoin just trading a little bit sideways here at 30,000, but I'm showing you the chart going back to 2017. And the reason I'm doing that is we want to study history. Now, history doesn't repeat itself, but it can be a great reference for what's going to head to the future. So we can take many learnings from it, and we can at least use it to aid our preparation for what is to come next. So what better way to study than to study the previous bull markets and bear markets, right? So let's take a look back and do this ourselves, because sometimes you listen to an influencer talking about bear markets or bull markets who maybe like myself were around and experienced it, which is one thing, but you can still learn from it even if you're new to crypto, right? Even if you enter crypto here in 2022, so what? You can go back to 2017, you can look at the charts and you can analyze it, draw on the charts like I have here and really get an understanding of what's happening. So let's go all the way back to January 2017. January 2017, I'm on the weekly candlesticks here, and you can see that we created a low of 800 here on Bitcoin. Okay, so Bitcoin within that week, you could have picked up Bitcoin for $812. Now, what I want to do then is I want to fast forward on to obviously what we knew happened, which was this, right? We had this massive run up here. I just increased the scale. I want to show you that in 12 months, you had a 20x, okay? So Bitcoin went from, well, it was over a 20x. It went from about 800 all the way up to just shy of 20,000. This weekly closing at 19,666, okay? So you did a 20x in 12 months. Now, that was a bull market, okay? And anybody who entered the market here felt very, very painful. And you can compare these people who bought in at this point to the people bought here in December 17. You can compare those to the same people who were buying in November when Bitcoin was at 69,000 on this run. Okay, so now the question is, what's going to happen, right? Everybody's bought at some point along the curve. Somebody who's bought early, they're pretty happy right now, right? When it's up at the top. Others who are buying on the way, varying levels of happiness. The ones who are buying more on the last few candles, which is 1, 2, 3, 4, 5 weeks before the peak, those are the ones who are going to be in the most pain. But now you need to study, okay, what happens next? Okay. Now, it's the same thing now. Bitcoin topped out at 69. People bought at very different levels. If you bought anything less than 30K, you're absolutely fine, really. You're only now feeling break even. If you bought at 40K, you're in the red. If you bought at 50K, you're severely in the red. If you bought at 60, 69K, obviously you're feeling it a lot more. So now what we want to do is fast forward. And you start to see that the price falls. And at this point, you're now sitting at March, so it's about 3 months on, March 18, and now you're sitting at a weekly close here of about 6,800. Okay, so you've lost about 14 grand there, quite a substantial fall there in that period, a really big retracement in 3 months, and now you're really feeling it if you chase the green candles on this point. Fast forward a little bit more, and you get a bit of a relief rally. You're like, okay, we're back to 9,000, 10,000, and then it falls again. Okay, so now what you're looking at is on the low candle here, 5,700 on your crypto. And if I keep progressing this out, what I want to show you is the year ends out here. And so by December, let's just take the low here, by December of 2018, 12 months on from a high of 20,000, you are sitting here on crypto being worth 3 grand. So again, if you started from Jan 17 buying at $800, you're perfectly fine even at 3 grand, right? You've still got a triple up of your money. But anybody who bought latter in the cycle really starts to feel it at this point. You're really feeling it because you got the worst of both scenarios. You bought it at the peaks and you're selling at the bottom. The exact opposite of what you want to be doing in investments. So you really suffered from an 85% retracement here on crypto. And that was, indication of a bear market, 12 months. So 12 months to run to your peak, really fun 12 months. And then a really horrible 12 months to give it back up again. Perfectly symmetrical, really. Although this run up always happens faster because the FOMO comes in quicker than the bleed because you get denial on the way down as well. Okay, now let's fast forward to see what happens thereafter. So you start to see you get a bit of a recovery, right? After a year of downward cycle, Bitcoin bottoms out, and that's what everybody's discussing now, right? What is this bottom? And then you start to see this bit of a recovery, and it starts working its way back up. I think it touches 9,000 here on the high on that candle. And then it keeps going. And now you're getting a little bit excited. You get this crazy wicking candle here, which takes you to 13,000. People are feeling much better at 13,000 versus 3, right? Just if those who bought even right at the top are starting to recover a lot of their losses, those who managed to buy the dip here are doing much, much better, right? If you're buying at 3 grand versus 13 grand, you're happy there. But let's keep going because it's not quite finished yet, the cycle. So this, by the way, was in June, so that's 6 months on. And let's keep fast forwarding the second half of the year. And if you see in the second half of the year, it just gives it all back up again. So what a horrible feeling this second year was. So remember, 2017, a really nice year. You've 20x your money. Those people who jumped into crypto then lost 85% to the downside. Then you're like, okay, that was my first year in crypto, horrible bear market. Hopefully next year can be better, right? 2019 can be better. But as you saw here in 2019, you had a good first half of the year, and then it gave it back up in the second half of the year. So closing out on 2019, you're sat here at about 7,000, okay, versus a high of 20,000. You're 50%, less than 50% of all-time highs. And then we start progressing into 2020. And we know, obviously, how 2020 plays out. You get this massive fall from COVID. So now you're really bummed out. Now you're getting to a close of 5,000 here on your crypto. Almost, this is in March 2020 versus your highs, which date back to December 17. Really feeling horrible right now. You're more than 2 years on from the highs, and this is now where loads of people have exited crypto at this point, guys. Trust me, in 2 years of pain, loads of people have forgotten about crypto. But guess what? The builders are still building. Many things were built in a bear market, right? Whether it was Coinbase, when it was OpenSea, many great platforms and great projects in the decentralized space as well were built during bear markets. Because the builders don't look at price. They're building because they obviously see the future in crypto for 10, 15, 20 years in their whole lifetime, right? So they're not looking at the price. They don't care. They continue to build through this bear market. And the smart investors continued to accumulate and kept their emotions away. And I'm going to come on to what do we learn from this towards the end of this video. So I just want to make sure everybody's following this. So then in March of 2020, you've got COVID dip. So the COVID dip takes you all the way down to 5,000. Really horrible, not feeling good. But then what I want to do is I want to progress this out. And I think a lot of you will obviously know how this plays out. But what you end up getting is this. And as you can see, there is not enough room on this chart to show you what happened in the next run. Okay, look at this, how much I'm having to adjust this chart to get this candle, which takes us to 64,000 high. Okay, so you get a close just shy of 65,000, call it 65,000 on April the 21st. Okay, so from your low of COVID in March of 2020 up to April, it was 12 months of a beautiful bull market. And again, where did it top out? Exactly at 12 months, just like the bull run from 2017, exactly at 12 months. So now we need to ask ourselves, okay, what's happening? Well, we then had this little bit of a movement, and then we created a new all-time high. So technically, the new all-time high meant that it was an extended bull market, which is what everybody was speaking about last year. You had a bonus little bull market here because everybody's thinking, oh, once we peaked out here, you have a blow-off top. A lot of you would have heard this technical analysis talk about a blow-off top. If we just fell from here, that would be a blow-off top. Exactly what I showed you when we hit 20,000 in 2017, how it blew the top off and you went straight into a bear market. But we didn't get that. We got some really good strength around these levels. And that is why it was really important that we hold these levels again. Because if we don't, then we can say, okay, this was the extended top, and now we could be entering a bear market. Okay. And again, if we're identifying November as the bear market, your counter for 2 years, I know this sounds horrible. It's not fun for crypto, but your counter for 2 years of accumulation could be starting from then, from November 2021. So you could be talking November 2023. Okay, and then obviously you're going to get your 4-year cycle as well. So that's something we need to keep an eye on, and that's something we need to prepare for. If we're going to have downside here for 12 months from November, so from the first 12 months, remember, was just a bleed from 20,000 all the way down to about 3,000. If we're going through that, then from November 21 to November 2022, if the thesis is right, and if we lose these levels, we will be going down, right? We will be going down to create our lows for the rest of this year up to November. And then maybe even 2023 is just you staying low for quite a while, an opportunity to accumulate as loads of people are disenfranchised, disillusioned with crypto, don't believe in crypto, nobody's talking about crypto. And that is going to be the test. If that happens, that is going to be the test. Now, what is fueling this bearish scenario, right? Because you can argue we can get a bounce and go up. And there's two scenarios. And the reality is we don't know which way we're going from here. And nobody knows, because like I said, history can be a reference point, but it's not going to repeat itself. Why? Because crypto is very different now to what it was in 2017. That is why we have to be careful at what we study and what information we take from it. So yes, we know that that is a possibility. And if we see ourselves break levels and start falling to really horrible levels, what lessons can we take from history? Well, we know that we could be there for another year and a half or so, right? And it's important that we don't give up on crypto, because many, many people going back here were giving up. Right? You imagine here, up until, just about here, September 2020. So let's go all the way back. The top blew off in December 17. All the way up to September 2020, almost 3 full years. You would have been patient if you were still in crypto, right? Imagine, you would have had to be super, super patient, and loads of people exited crypto here. Even I didn't spend that much time in crypto at those points because I felt disillusioned to that as well. I was doing other things, right? And loads of people fell for that. They thought, oh, crypto is done, it was a fad, and then it went on its crazy. So what's the moral of the story? If we do go into a winter, if we do go into a global recession, and that's the important point here, we do have a global recession on top of this, weighing in on this. And this is one of the reasons pushing us to be a bit more biased to the downside. I'd rather be more cautious for downside and prepare myself psychologically, portfolio allocation wise, etc. Because if we run to the upside, things are a lot easier, right? Things are a bit more euphoric. Everything goes your way, less to worry about, less to do, right? And so you've got the global recession. You've got the Ukraine war continuing to happen. You've got pressures on inflation, right? Every central bankers around the world are focused on tightening financial conditions. The printing since March 2020 has been insane, right? Now we're not in this accommodative environment anymore. So if we're not in this accommodative environment, if you can see that the S&P is almost at bear market territory, if you can see that major growth stocks have lost 70%, major altcoins have obviously lost 8%, you're seeing huge companies, blue chip companies like Target, Walmart falling after missing earnings, Target losing 25%, right, in a day. That's the worst day in their trading history. These are blue chip companies. It's clear that we're heading towards some sort of a global slowdown. And now the question is this: will Bitcoin follow this global recession? Because the Bitcoin's not faced a real true global slowdown, global financial crisis. So, Bitcoin came in after 2008, which was the last financial crisis we had. So how will it carry on? Will it continue to act as a growth stock? Or will it do, which a lot of people, including myself, are hypothesizing, which is after a certain level of retracement, i.e. some more downside, will it decide to decouple? And we saw that clue happen yesterday. I don't think that's the rule yet. It was an exception. It happened yesterday. We got the decoupling. But can that continue to play out? Right? Will Bitcoin get to it where it goes, enough is enough? The world's in recession, the dollar's falling, unemployment is high, we're going to go for a run. Because you've noticed that Bitcoin in adversity does do really well. That's definitely something to watch out for. We saw that obviously during the COVID period as well. Bitcoin went on a huge surge. Will it go through another surge and a decoupling when the existing traditional finance system is struggling, right? When you're in a recessionary environment, when you're in a global slowdown, when interest rates are being hiked, that's what we need to watch out for. Either way, we need to be positioned for this thing both ways. If we're going to be in a prolonged bear market, let's always prepare for the worst. If we're going to be in a prolonged bear market, let's get our psyche ready. Let's say, okay, fine. If we're going to be a year and a half where I'm not in the green, my portfolio is not going to be in the green, what am I going to do? You've got two options. Go ignore crypto. If you're in this for a quick buck, get out of crypto. Go find a quick buck somewhere else, right? If you want to trade the volatility. That's fine. You can do that. But if you're here as an investor for the long run, you can say, okay, you need to commit to this. You can say, what are my favorite projects? What are my high conviction projects? What are the ones that I'm going to continue to buy? And this is, again, another piece of advice we're giving our course members last night. Only buy coins right now, which if they fall another 25, 30, 40%, you're not going to be panic selling. Otherwise, why are you buying it? Right? You're hanging on the edge of a bit of a cliff edge, right? We could be tippering ourselves into a recession, if not currently in the onset of one, right? So really important, pick up coins which you're willing to accumulate, the ones which if it falls another 25%, you're going to be like, yep, I'm buying the dip, that's cheap, I'm buying the dip. And if the answer is no coins, you have no conviction any coins, then you need to ask yourself, why am I in crypto? Maybe that conviction coin for you is just Bitcoin and you need to be a maximalist through this crypto winter. That's fine as well. Be honest to yourself based on the conviction you have. Really consolidate your plays, get rid of the fluff, no time for this. What do you think all the world's biggest investment funds are doing right now? They're getting rid of all the fluff in their portfolio. In a bear market, when the government is printing money, you can accumulate any stock and it's going to go up, right? High growth stock, high risk, a SaaS company, a tech company, anybody who's raising funds, go and get some cash and off you go. In the difficult times, the investors go, hang on a second, which companies are profitable? Who's actually got cash on their balance sheet? Who's actually delivering EBITDA or profitability? And they go and rotate their portfolios into them. That's why you're seeing the NASDAQ get smacked. That's why you're seeing growth risk on plays getting hit. That's why altcoins and Bitcoin are struggling, because it's considered a high risk asset where you're investing for future growth. Okay, so really important. If you need to diversify into your solid plays, now's the time to be doing that. I wouldn't be focusing on, I've said this quite controversially, but I'm not focusing right now on ecosystem plays or what I call second derivative plays. I want to invest in the layer one platforms, and that's where my comfort lies. Big blue chip names, a couple of lower cap plays, and just keep my portfolio that on the projects that I know. The ones that if it falls another 25, 35%, I'm not going to panic sell, because the panic selling is what's going to get you in trouble. We saw that with the history, which I've just shown you. So there you go, guys. That is what I'm doing to prepare for a prolonged bear market if it plays out. Now, don't get caught up. I'm going to speak about this a little bit later on, but there's going to be the risk that we could start rallying to the upside and then have a fall back down to the downside. So that's something I want to cover off with you guys, perhaps in a video later on today, because that's something which you can trade, you can invest in, but you need to be aware of the risk to the downside as well. Don't forget to smash up the like button and subscribe. If you like my perspective, please consider checking out the course member live streams, ijaz.uk/member, where we do exactly this kind of stuff live with you on 3 times weekly live streams and more. Thanks for watching the video. I'll see you in the next one.